Welcome everyone to the Kendall Report. It is Tuesday night, and I had the misfortune of not being in the office all day watching the craziness from remote, we'll say. And it was an interesting thing to watch because I talked to you folks last night about this pattern that's been unfolding where we start higher, market looks like it's going to rally, and then it sells off. We did it again. And I keep telling you, watch for these patterns. So I'm just going to suggest is maybe we'll open lower for once and then see a rally from there. But markets are in big trouble. And this currency situation is starting to grow across the world, dislocation of the bond markets, everything. I'll try to get into some of this tonight. It's going to be, I think things are getting so difficult to understand what's going on. If we look back on like the GFC and the great financial crisis, that was easy. I mean, everything was very easy to figure out. Now, this particular situation, I heard a comment by someone who said, you know, I always tell you markets look similar looking back, but they're different. This one's way different. And what's different about it, we'll start here tonight. What's different about it is that it's hard to figure out who's going to be affected by the dislocation of capital. And it's, you know, is it the sovereigns? Is it the banks? Is it the corporation? Or is it just everything? And I'm coming to the conclusion that just about everything is being affected. The world's biggest commodity market there is currency. And there's no doubt about that. And what we're seeing here is with this dollar strength is just destroying everything. A couple of nights ago, my video was named "The Dollar Destroys the Planet." And boy, it's starting to look that way. And I'll just put this on. I usually stay on screen here, but this chart that I have up on the screen here is the Chinese yuan. It's at right now 722. It was 21 just a few minutes ago. And this is just becoming just a complete disaster. And you can see when we're looking at that chart, it's just vertical. And so what is going on here? So I'm going to go from talking about what's going on in China right now. We'll come back to the U.S. and the rest of the planet, and I'll try to tie this together, some of the thoughts I was having earlier today when I was getting ready for the broadcast. And so I think that there's an interesting thing going on in China right now. They have an event that's called the Party Congress. And it's basically, I think they have like 22 or 2,400 of these delegates come, and they announce where Xi Jinping will continue to be in power. And I actually think, and I was talking to somebody about this the other day, is that what's really going on with Chinese zero COVID policy, all that, that's just a smokescreen to cover up how bad things are in China. And with the housing market, real estate, dislocations all across the place, and then just in general, bad economics. So they can go to this party Congress, Xi Jinping can go there and say, hey, this COVID thing is really messing things up, even though they have, 1.3, 1.4 billion people and 12 people had COVID and they locked the place down. It seems fairly obvious that it's not a material issue there. And this has been all of I think, a cover up just to try to keep the world and most importantly, the Chinese from not realizing what's really going on with them. And I think this is really kind of scary. And maybe I'll go into some sort of, I'll try to get something together for Thursday night, maybe to finish the week since we're finishing this quarter. There's a couple things that I think could be setting up as we come into October. And, not only does September have a bad name, October has a worse name than September does. So let's talk about just a couple other things that, let's switch back from China being bad. Let's come back to the U.S. And it's like, who's selling all these bonds, right? We saw the 10-year print 396 today, almost 4. And it's, it's getting even, I guess, crazy what's going on there. And I think I'm going China, the bond market, Japan. I'm going to be all over the place, so bear with me. And I'm just hopefully that I connect the dots properly here. So we're seeing this massive selling coming into the bond market. We know QT is going on and raising rates, and with all the selling that's going on there, but everybody's selling treasuries. And we could go to like LQD, go look at a bunch of bond indexes. If you're in the bond market, you've got a problem. And it doesn't seem like there's any bottom. So when that's the case, there is a bottom, but still there's just a massive amount of dislocation of capital. So the currency issues, now I'm going to Japan. Japan is in part of this cycle as well, as we get into just looking at them trying to support the JGB market. And I think they're part of the sellers in the treasuries. I think everybody's selling, and including, then you could go across the other pond from the US and look at the UK. That place is just melting down. And, they're just saying incredibly stupid things from the central bank, the Bank of England, and just everything that's going on there. And it's just, I think we're seeing this world crisis that is just starting to come to a head. And the whole situation, what we're really seeing is the failure of MMT. They thought they could just print. If you guys didn't catch that rant that Rick Santelli went on today, I just happened to catch that by accident. If you haven't seen that, look it up. I wish I had thought about this before I came live. I would put that that clip up, but he really called it right. And I've been talking about this, is that what we're finally seeing, I think, is everybody thought they could be like Japan and just print money forever. And they're going, hey, they did it for 30 years. They're fine. Their economy's going fine. And as I always used to say, it works until it doesn't. And right now it doesn't. And we're starting to see some really huge collapses in the currencies. Like I showed you in the yuan, you could go across the board on just about every currency out there. So when your currency fails, you've got big problems, and the strong U.S. dollar is not helping U.S., certainly on exports and every other thing. So it's just a bad scene for everyone. It's a giant train wreck that was going in slow motion. Now all the trains seem to be coming off the track at the same time. And I'm trying to put together, folks, this is so complex. This is way above my pay grade. I will put that out there right now. And I'm trying to put the puzzle together. Like I said, in 2008, and you folks, some of you are on here knew me then, that was the easiest call I've made in my life. I worked in mortgage pipeline hedging and that's where my job was prior to that, going back into the 90s. And so I was groomed for the mortgage crisis. This is something way, way different. And this is where we're looking at the failure of all of these policies, all the QE, all of the different MMT, everything that's been going on. I mean, look what they're doing in the UK right now. Hey, your bills are too high. Here's some money. Like, that's going to fix something. I mean, it's getting absolutely crazy. So maybe everybody ends up to be Zimbabwe, and we get some kind of weird hyperinflation. Stagflation would be awesome compared to that. And so, yeah, this is, I don't know where this is going. I just wanted to bring it up as a conversation. And, I'm trying to put this thing together the best I can, doing some research, trying to put the puzzle together. Highly complex and on a scale that I don't think the world's ever seen. And so it's debt, it's the misuse of capital by governments, it's everything, and it's finally coming to a head. I remember, I'll try to get out of this loop here pretty quick. There's a couple other things I wanted to discuss before we move on. But I remember back in 2008-9, and this was the scenario that everybody was joking about. How do you fix a debt crisis with debt? And they did. They thought they did. And they just went down this trail. And then we've seen all the stuff that we've been through in the last couple of years. And now it's all coming to a head. And they're finding out you can't just print money and continue to print money and expect it to everything to work like it did. So anyway, I'm going to break out of that for a second. So let's talk about a couple other things that we need to pay attention to. We're in the final 3 days of this quarter, coming into Wednesday, Thursday, Friday's market. I'm not sure what we're going to see, but I think there's going to be a lot of rebalancing. Folks are trying to figure out what's going on. We've got, think about this, we've had all kinds of compression, earnings compression. Meanwhile, we've got the economy rolling over, and everybody was focused on earnings. And now it looks like the economy is starting to hit things. Although, let's look at yesterday's numbers. I thought this was interesting. I talked about housing being down. It was down 0.6. And then we had consumer confidence was expected to come in at 105. It came in at 108. So somehow, some way, labor, consumer confidence, those remains like crazy high. And I'm not sure what to make of this. It's really probably, I think, one of the most confusing times there is. And I just don't know if it's the metrics, the way that they're being harvested, or what's going on. And, something has to completely break here when it comes to the labor. And I think we will see as we come into fourth quarter, we'll start to see exactly, some contraction, employment numbers start to move up a little bit. But everybody, all you have to do is watch CNBC or Bloomberg for a couple hours one day, and you'll get the flavor. And the flavor is, well, we're probably going to have a recession, but it's not going to be very severe. And that just seems to be mainstream. So something worse has to happen. And I don't think, like I said, what I'm seeing right now is all these trains are coming off the track at the same time. And do we finally just get a complete meltdown? And, I know we've got all kinds of, the talk of the town is all these puts that expire on Friday and all these different things. Listen, I don't know what all that means. Like I said, I feel like trying to figure out this right now is really impossible. The good thing for me, Bob Kendall, my customers, and those folks is we're just in cash. We're, you'll see here in a minute, the short-term database is out of everything. The intermediate database owns some things, but there are some symbols that should be owned. There are some things to own out there. Not everything's going down, but most everything is going down, and that's why we have such a large amount of cash in the system. Just looking at my notes here, making sure I covered. So let's talk a little bit about also what came out. This is another bizarre number, is new home sales up 28% month over month. And I was talking to folks the other night about going to the best deals there is in new homes right now. You don't want to buy an existing home. You want to buy a new home. These builders are discounting 15, 20. I've seen as much as a 25% discount on a brand new home. And one of my jokes, I was talking to a friend that's in the real estate business. Well, that's great, but what if the company that's building a home goes out of business? Maybe your warranty is not very good, but at least you're going to get a good deal. But meanwhile, with the interest rates going up, I'm shocked at what happened. There was a slight little downtick for a minute in mortgages, and some people are saying that's what did it. I think it's these discounts from the builders that are pumping these numbers. But that's an insane number. I don't think that's sustainable, but that's a pretty insane number, 28%. I think it was 685,000 sales versus around 550 was the expected number. So that kind of really, was a blowout number that does not look like it's going to be sustainable, as I said, but that was a big blowout number. So let's go ahead and get into the rest of the show, get through the database, and look at the technicals and get into the interest rates just a little bit further. Okay, so not much to sell, but we did have 171 sell signals, 62 buy signals. We're down to 6.79%. This is about it. I guess we could go even less. I did the video a couple days ago, maybe 2 or 3 days ago, that we're in full liquidation mode. That's exactly what's happened. So we're sitting here at 6.7%. I suspect as we come into Friday, if prices, we're going to continue to see the intermediate models step back as well. So there's just nothing out there from the standpoint of any optimism that you could dream up. Yeah, so, I'll tell you something that I just real quick here is, I see some comments here, doom and gloom is what makes a big bottom. And, I thought our database was hanging in there doing some interesting things a couple of weeks ago. And it looked like maybe we were going to set up a right shoulder. Now this failure, I've been through several of these when we get to this liquidation mode, and I've just put this out there is that we can stay in this kind of configuration for a while. There's still more to go on. I was flashing back, and I think I talked to you folks a few nights ago about the 2000.com bust. This is where we're at. We're at a multi-year cycle that's coming in here. This doesn't get fixed overnight. This debt, these currencies, everything I talked about on the front end of this stream tonight is exactly what's going to dominate things. And hey, we're going to see rallies. It's not going to be a straight line down. That's not what I'm talking about. I'm talking about the general conditions continuing to decline, and there's not going to be. This is going to be from making money, especially for those of you that are long-only money managers, which is most of the customers that we deal with. It's going to be virtually impossible to make money, and it's going to be very difficult for people going forward, especially even being in cash to protect is going to be a problem because of the inflationary pressure. So, we've got coming in at the end of the week, we've got the PCE coming in, some other things. And something I didn't mention, I'll just go here now, is we have Powell is speaking tomorrow. And I think there's 4 other Fed speakers tomorrow. So they're going to crank that up. I'll bring that up again here in a minute when we go through the interest rates. So we're getting very close to the, started here with the weekly chart, and we're getting very close to the 200-week moving average. That number right now is 35.57. We have a fib target 1 right now of 33.50. So we do have targets on the intermediate for it to decline there. We're looking at the PPMs, and this rollover, there was, if we go back just a couple of weeks ago, back in the beginning of September, it looked like we're seeing PPM starting to improve. All of a sudden, everything rolled over, and we're seeing everything roll over. Now, the big thing that's happening here is the bottom indicator is the Wavetech 200. And the Wavetech 200 right now has crossed through its first, second derivatives. It's starting to decline. It's still positive. So there's a upward slope here, but it's starting to roll over. And that would put us into something that would look more like a secular bear market that would be lasting for a while. And that doesn't mean that we're just going to decline straight down and there's no rallies. It just means that we are entering into a cycle here that doesn't look like it is going to be very easy to turn. And if you look around the world, you look around everything that's going on right now, and what I was just talking about a few minutes ago, there's no way that there's some switch that's going to flip and everything's going to be okay in the UK and Japan and China and here in the US. There's just not a flip of the switch. So as bad as things look, it looks like they'll stay bad, and the conditions and market sentiment will stay bad. I'm sure at some stage here, at some point on these charts, we're going to get a rip your face off, rally for 7%. It's just going to be a crazy rally. It's, the stampede will show up. And I've talked about that before, is that a lot of times what will happen is that the markets will get so overdone, and then there's so many new players in the market, retail, just across the board. There's so much money out there chasing the same thing. I talk about this as well. We're all watching the same movie. So as soon as it starts to move, everybody piles on, and it just keeps piling on. There hasn't been any pile on. the cycle that I've been talking to you about, and we continue to see that cycle, is that the markets open higher and then move lower. So maybe we're down 31 right now. So maybe we're about to maybe get the first day where we open lower and then reverse. So, I'm just looking. That's why I said you have to pay attention to how the market's been acting. And this has been an ongoing pattern. It's a bear market pattern where markets open higher and the sellers come out again. And you have to understand something. If the bond market and this big dislocation's occurring and everybody's selling bonds, this was the problem that happened in 2008. What happened was the only market where you could raise cash was stocks. And it became, at one stage, the bond market almost was not even functioning in 2008. We could end up in a similar situation without not having to have all these loan defaults and everything. Those might be coming. But for right now, there just seems to be just massive selling, and maybe just the surge in yields itself is going to start to destroy things. Think about what's going on with the structure of paying back the U.S. debt. I think it's probably pushing close to $1.1 trillion a year just to service debt. What if we go up another 20% or 30%? Those numbers are going to get big. And I've talked to you about this before, so I'll stay off of this, and I'll wait till I get to the interest rates to unpack that just a little bit more. Let's take a look at the daily chart here. So far, I want to review yesterday. We had a pretty crazy range because I was talking about an R2 level, possibility of an R3. R2 was 37.14. We got up to 37.33 early in the session. And then we saw the market just reverse from there and go all the way down and traded just shy of S3. We went to 36.35. S2 was 36.25, so we came very close to S2. So we did an R3, R1 plus, and really I would call it an S2. Now we come into today, we're already, if you look at the range right now, a high 36.74, 23 low. We're looking at R1 36.84, so we've almost printed R1. Our S1 right now is 37, S2 36.12. So we're probably heading for an S2. And if we break through this 36.12, I don't think there's going to be a lot to stop this. All of a sudden, this fib target 2 is going to come into play, 35.61. And you look at the market grid for Wednesday, and we already see that the 35 handle showing up in the daily market grid. So the volatility is high enough right now that we're already seeing these numbers. The extreme fib target 3 here is 34.56. So we'll stay with this analysis right now, but all of these indexes that I'm going to show you here are going to have similar type patterns and similar type expectations. So next we got the NASDAQ, same scenario here. I believe today is going to be the 13th day down on this market. Haven't seen a 13-day decline like this for a very long time. So maybe lucky Fibonacci 13 will show up, and maybe we'll get that scenario I talked about where we get lower opening followed by a rebound. We're down 106 right now. Percent. We're down 121 on the NASDAQ here. And we're just seeing just a complete collapse here, and seeing even the PPMs are starting to accelerate down again here. And we thought there was going to be a potential for a little bit of sideways here. And, sideways will be within this market grid right now. So look at this. 11,392 the high, 11,498 R2. We're looking at 11,411. So we came almost up to an R1. Low 11,184. S2 is 11,169. So we're close to S2. Maybe even looking, look at these numbers here, 11,082 and 11,004 is STX for today. This is the daily. So this is pretty substantial. The only positive is that the PPM2 is trying to stabilize, but it's still so negative in a deep trend mode that it doesn't really mean much. The next fib target down here is getting really ugly, 10,472, and then 10,043 is the equivalent target that we were looking at on the S&P. Going to the RTY, looking at the Russell futures. Once again, same configuration, 12 days down. Today will be the 13th day down. Maybe we make a lower low, and that will be maybe a met, like I said, lucky 13. We'll see how this plays out. I'm really not trying to predict any kind of low here, because I think there's, even if we do get a rally of some sort, there's going to be a lot of work to do. Like I said, you can go through a lot of these patterns. Typically, I talk about some patterns that I see all the time is like a 5-3-5, which actually is 13, right? So you get five down, 3 up, 5 down is a 13-day pattern. But this one, there's no ups. It basically is all down. There was, I think, I'm just looking at the chart, maybe one or two sessions that were positive. But for the most part, we're talking 13 days down. So I love the 13 number, but I'd like to see 5 down, a little retracement, 3 up, and then a move back down. And, you know, all of these indexes, like I've been talking about, all have the same configuration. PPM's big trend level on a weekly, the daily, everything is accelerating. The one thing that is happening here is that we're pretty close to getting to the low target 3 or the fib target 3 on the pattern. 1665, we're below that number, which is low target 2. 1619 is the extreme low there. So, you know, that's, and these numbers really, all they are is pattern targets. They don't really mean anything. They're not necessarily a target for a low or anything like that. They're just a target for the decline to continue. And what I use those numbers for, just for a quick reference, is if you do have those Fibonacci numbers, or you look for the market to give you some sort of message, like a reversal pattern, maybe we print down there and we close higher, maybe then we could start to talk about a short-term rally or something like that. I wouldn't mess with this thing until I see something that looks like a reversal pattern or some sign that maybe there's a capitulation of the markets. Something I haven't looked at, I just want to bring this up real quick. VIX 3260, the old metric of buy 31, sell 20. You know, it's there, but I'd be a little hesitant here. So we'll just see how this thing plays out. I'd be super cautious. If you're short, make sure you get some protection behind it. Those of you who've been in the live room, always have like some kind of trailer to lock down some profits so you don't get caught in some crazy mess, especially if you're playing with SQs that triple leverage on anything. All right, here we go for the 10-year. As I mentioned, we printed up to 399.2, and we're still seeing acceleration in the ppms, 1.52, 1.31, 1.08, and we're just crazy numbers here. I just want to put something up here very quickly. Yeah, it's interesting. The last buy signal we have, you see here on this pop-up in the middle, was a buy at 2.79, so 280. And that buy was signaling higher yields. We're still in that same pattern. This has just been an elongated pattern and almost entering into a parabolic curve. You can see the how the angle of attack and all of these moving averages are just vertical here. The weekly chart, we had RXT sell last week, and I've talked about this before. The RXT sells are not super reliable. The STX buys are, and especially when you get consecutive, like right now, this is the second one, and if we were to get 3 of these RTX sell signals, maybe then we would have something that would actually indicate that there's a peak in yields, but I just don't see it yet, especially with the acceleration. Look at the very bottom. Been talking about this. Is the weekly chart. The PPM, the Wavetech 200 is just soaring, and I've shown you this before, is that the pattern, what's happening is this 200 period moving average is starting to turn back up, and that just tells you there's a long-term trend on higher yields. And even if we peaked here, there's going to be some levels in back here, 330, 350, and those ranges are going to be rock solid bottoms in yields for right now, at least as we come into year end. And it's going to get really interesting here, folks. It's not going to take much for the markets to really roll over here. We saw a little bit of a steepener, but we're deep in a hole here on the yield curve, down 38 basis points on the 530s. That is a really big number. So just expect more of the same here from this market. And just to talk a little bit, so Powell's going to talk tomorrow. We've got, I believe it is 4 other Fed speakers, so they're making a circuit tomorrow. It's a book tour, and they're going to be really talking it up. Maybe they're doing this because I believe on Friday we have the PCE prices. Maybe we'll have to pay attention to their words tomorrow, see if, because they already know these numbers, right? So we'll have to see if they're trying to lead the market anywhere, or if there's some embedded subliminal messages that they're trying to deliver here. But here we are, 4%. I think, I forgot, I saw the 2 years getting into, crazy 420s. And yeah, it's a crazy world. Like I said, I think what's happening in the markets is this bond market's derailing, and it doesn't have to, maybe this is the difference in this particular crisis. It's like the pattern that I'm seeing here is vertical, but what's happening is it's not about Fed tightening. There's something else going on here, and massive selling of this debt is really getting kind of scary. And for right now, I think this is what we should look for. This is a synapse that just fired for me. Is what we need to look for is if yields continue to go up and then the dollar peaks. One of these markets are going to peak first, and if the dollar starts to peak and it starts to crack, now you see that the bonds are cracking, and then the dollar is going down. It doesn't have to plummet, but that's going to be a sign, I think, that there's something else going on here at the next level. So that I'll watch that, and that just trying to unpack what's going on here. Just that kind of came up for me just at this moment. So yeah, so just be watching these markets and looking for that kind of separation between the two. Next, we'll look at crude oil. This is a weekly crude. Continues under pressure. We had a little bit of a bounce. Let me flop this over to a daily for a second here. We had a bit of a bounce yesterday and looked good, felt good. All we're really doing, we are setting up one of these bubble bottoms. Fib target 1 is 73.28, and so far the low is 76.42. So we're very close to satisfying that fib target. But look at the PPMs here, minus 1.32, minus 0.79, minus 0.36. So just tons of resistance overhead here, 81, 84, 87. There's a ceiling on this market right now. And like I said, I originally had thought that we were going to get a, it would hold around 82, 92, and everything's coming apart. And the best I can tell that this is probably some demand destruction, more so than anything else. And I think it's going to be a bit interesting to see what happens. The other thing for those of you in Europe, if you could comment just what's going on with your energy prices. You don't know what's real anymore, and especially those of you watching the replay. If you make comments, those are easier to follow up. But comment on what's going on there. I have this feeling that things aren't going to, from an energy standpoint, that this thing's just completely about to implode. And while I said we couldn't get into a 70 handle, we're there, and maybe now there's a 60 handle, because I'm looking at these fib targets, 66, actually 64, 63 are the extreme targets on just from a Fibonacci standpoint. And with these kind of big downtrend numbers, that's pretty huge. Let me just go to the weekly now, and then we'll move on. But the weekly is just continuing to decline here, and PPMs these are really big numbers, and the numbers that we're looking at here are minus 1.88, minus 0.17. So these are really big trend numbers, and it's very difficult for the markets to reverse from here. So about the best thing you could hope for is that we find some price low, whether it's 73 or some extreme where it bounces off a 63, 64 level, and then it comes back in and stabilizes. Maybe we can see exactly what, maybe there's something there that will lead us to believe that this market is trying to stabilize. Next, we'll look at gold. Gold continues to roll over here. I've been talking about this for a while. We got two fib targets to watch. This is weekly gold. Two fib targets to look at. 1620, we basically printed that. 1629 is the low overnight. We're looking at this low of a low of 1627 on the weekly chart, and that fib target is 1620, and below that it's a nightmare down to 1540, 1494. And I think it's somewhat interesting. We haven't heard from our good friend Peter Schiff for a while, talking about gold and telling us about how this is the thing to go. Remember when it rallied up over here on on in March when it printed up to 2107 on the near futures, and it was going to the moon then. Well, it went straight down. So we're now finally getting, I'm going to go over to a monthly chart here real quick just to see what is available. Yeah, so here's another number. 1497 is the 200-month moving average. And nothing good here, folks. These are major secular downtrends. There was a shot about 2-3 weeks ago that we could get some sort of low to set up, and it's just nothing there. And it's not going to happen with the dollar like it is, interest rates soaring like they are. Absolutely no reason to own gold. And I guess you could be short. You could have been short for a while, but this market just continues to go down. Probably we'll see that 200-month moving average. Like I said, right now that number is 1497. So we definitely got some 1550 to 1500 is probably the extreme. Maybe there will be viewed some value at that point. Finally, we'll get to Bitcoin. And Bitcoin had an interesting overnight run. We did get up to 2030. I was talking about the potential of getting up there, maybe even printing at 2160. 060 was the major resistance. But we're just seeing this thing still stabilize here. 18,517. I've talked about this number. 18,555, 18,2. Those are the numbers we keep bouncing off of. And it's interesting because the PPMs don't look as bad as maybe they should here. And so this needs to be watched very closely. Let's go over and take a look at the daily. I've been talking about these downward fib targets right now, 16,112, 13,5, and 12,000 even. That is definitely a serious and valid projection to the downside. The PPMs are turning south here on the daily. It just really comes down to holding that 18.2 level, just running off, and we've been down 18,492 overnight right now. So yeah, just watch this number. Once again, I think all of these assets are in big trouble, and it just doesn't look like there's nowhere to hide. And I've talked about that before as well, is that really as we complete tonight's stream, I keep talking to you folks about there's nowhere to hide. There's no place to allocate. Like you'll hear, if you go on CNBC and different analysts, and they'll talk about, defensive stocks. The best defensive stock right now is no stocks. And that's, we had, there are a few stocks that are worth owning out there, but very, very few. And it's a needle in a haystack. We're really, the market's like a no-fly zone right now. You just got to watch just stay away, don't put any planes up in the air because they'll probably get shot down. But anyway, as always, I didn't tell you before, but go ahead and subscribe. If you're new here, just go ahead and hit the subscribe button and hit that bell so you know when I come live. I do these lives every night. So anyway, have a great evening, folks. Those of you in the live room, see you at 1 o'clock Eastern time tomorrow, and U.S., and we will see what we can find. Maybe we can find some good trade setups. Looking forward to seeing you there. Talk to you tomorrow night.